Hey everyone, and welcome to this explainer. Today, we are putting the investment spotlight on a truly turnkey asset. It's one that perfectly blends the rock-solid stability of a historic neighborhood with the ultimate operational efficiency of a brand new build. Right out of the gate, let's talk numbers, because you're going to want to notice this 8.8 to 10.6% estimated cash-on-cash return. I mean, finding double-digit yields in a stabilized, blue-chip neighborhood is incredibly rare in today's market. It really sets the stage for why this specific asset is absolutely worth your time and analysis today. So what exactly are we looking at? Meet 3945 Graceland Avenue, located right in Indianapolis, Indiana. As you can see, it is a brand new construction duplex. I want you to visually anchor this beautiful property in your mind as we go through the financials today. We aren't talking about taking on some century-old money pit here. We are talking about a purpose-built, modern, income-generating property that is designed to perform from day one. Here is our roadmap for the analysis today. First, we'll look at the baseline facts of this turnkey investment opportunity. Second, we're going inside historic Butler-Tarkington. Third, we'll compare new construction versus historic housing. Fourth, we'll be breaking down the financials, and finally, we'll wrap up with building long-term wealth. All right, let's dive into Section 1, a turnkey investment opportunity. The absolutely crucial starting point is understanding exactly what you're acquiring. We're looking at a 2-unit property, with each side featuring 2 bedrooms and 2 full bathrooms, spanning 936 square feet per unit. The total purchase price is a very attractive $350,000. But what makes this highly accessible for a lot of investors is the estimated cash needed to close, which sits right at $94,500. Now, that assumes a standard 25% down payment plus your estimated closing costs. Honestly, it's a very clean, straightforward acquisition. Moving right along to Section 2, inside historic Butler-Tarkington. Market analysts actually explicitly call Butler-Tarkington a stability-first investment market, ideal for long-term holds. And we aren't talking about some highly speculative, volatile, transitional area where you're just crossing your fingers and hoping for revitalization. This is a mature, deeply established market that is prized for capital preservation and steady appreciation over time. Let's see how this builds our investment thesis. Geographically speaking, it's incredibly strategic. You're positioned just 10 to 15 minutes north of downtown Indy, giving your tenants super easy access to the city's core. And, crucially, it's walkable to Butler University. This provides an institutional quality demand driver. It basically guarantees a steady, reliable pool of students, faculty, and staff who are always going to need quality housing. Combine that with the established professionals who flock to the area's quiet, upscale vibe, and you've got a virtually bulletproof tenant pool. Which brings us to Section 3, new construction versus historic. Okay, notice the stark contrast here. The typical housing stock in Butler-Tarkington consists of historic Tudors and bungalows that were built decades, sometimes literally a century ago. And while they are undeniably charming, they come with older plumbing, aging roofs, high utilities, and a notoriously heavy maintenance burden. On the flip side, 3945 Graceland gives you a completely different experience. Because it's brand new construction, it comes with builder warranties, high energy efficiency, and dramatically lower maintenance costs. You basically get to command the premium rents of a historic, highly desirable neighborhood, but entirely without the operational headaches of a historic home. It is a massive strategic advantage for any landlord. All right, the moment we've been waiting for, Section 4, breaking down the financials. Now, before we look at our own projections, I want to prove the market demand to you. Check out these recent 2025 builds right nearby. These are newly constructed properties at 621 and 623 West 39th Street. They successfully leased up, proving beyond a shadow of a doubt that there's a strong, proven appetite for premium, new build rentals right in this exact zip code. Let's look at the hard data from the comparative market analysis. Those newly built townhomes on 39th Street, they leased for $1,550 and $1,600 a month. Because of this solid evidence, our projected rent for 3945 Graceland is pegged at just $1,438 per unit. That brings our gross monthly income to $2,876. So our projections aren't just realistic, they're actually quite conservative compared to what the market is currently paying for comparable new products. Transparency is key when we talk numbers, so let's break down every single expected operational expense. Against our gross income, we have estimated monthly expenses totaling $2,451. This includes a projected mortgage of $1,643, assuming a 6.25% interest rate, an 8% property management fee of $230, taxes at $225, insurance at $110, plus a conservative vacancy and maintenance reserve. Even when you factor in full professional property management, making this a truly turnkey investment, the math holds up beautifully. Which leads us directly to this fantastic number right here, $462. That is your estimated monthly cash flow. I really want to remind you, that is entirely passive income generated after every single expense, debt service, and reserve allocation is paid out. Your tenants are paying down your mortgage, they're maintaining the property, and putting over $460 in your pocket every single month. Finally, let's look at Section 5, Building Long-Term Wealth. Once you acquire and stabilize this asset, you open up some fantastic, flexible exit strategies. Step 1. You could simply continue holding for that long-term cash flow and let the tenants systematically pay down your debt. Step 2. As the property appreciates, you can refinance and pull that tax-free equity right out to fund your next deal. Step 3. You can outright sell and capture the appreciation. Or Step 4. Execute a 1031 exchange to roll those gains into a much larger asset, completely deferring your capital gains taxes while scaling up your portfolio. Now check this out. Over a 5-year projection, combining the principal paydown from your tenants with conservative appreciation estimates in the stable market, this property is projected to generate roughly $83,000 in total equity growth. That right there is the silent wealth-building engine of real estate at work, operating completely in the background while you just collect your monthly yield. So I will leave you with this final provocative thought. Is 3945 Graceland the low-maintenance, high-yield asset your portfolio is currently missing? When you combine the deep economic moat of a blue-chip historic neighborhood like Butler-Tarkington with the supreme efficiency of new construction, well, the results really speak for themselves. Thank you so much for joining me on this explainer, and I highly encourage you to dive into your own due diligence on this incredible opportunity.